Good evening and welcome to tonight's Political Update, where we carefully examine emerging economic policies driving significant shifts in America's trade dynamics. Tonight, President Donald Trump is preparing to unveil his new Liberation Day tariffs, marking an aggressive pivot in U.S. trade strategy decisively. These bold tariffs aim to reduce America's reliance on foreign imports while bolstering domestic manufacturing and rectifying long-standing trade imbalances effectively now. President Trump has consistently championed efforts to boost domestic production, arguing that reducing import dependency strengthens our national economic sovereignty for progress. A centerpiece of this initiative is a substantial 25% tariff on imported vehicles, designed to incentivize robust American automotive production and innovation. Additionally, expanded levies on steel and aluminum seek to fortify U.S. metal industries, shielding them from volatile global markets and unfair international practices. The administration plans to impose additional taxes on imports from key trade partners, targeting nations accused of unfair economic practices consistently today. Specifically, countries such as China, Canada, and Mexico are in focus as the tariffs address enduring trade imbalances and economic inequities effectively. Economic analysts project these tariffs could generate nearly $600 billion annually, channeling funds into domestic initiatives and significant industry investments across sectors. The administration asserts that the substantial revenue will rejuvenate domestic manufacturing, create new jobs, and gradually reduce long-standing trade deficits effectively soon. This strategic policy shift is designed to rebalance international trade relationships by reducing dependence on imports and stimulating robust American industrial growth. The Trump administration touts these measures as essential corrections to decades of imbalanced trade policies and inherent market vulnerabilities for lasting reform. Despite administration optimism, leading economists caution that such aggressive tariffs might inadvertently trigger negative repercussions across various economic sectors if unchecked severely. A primary concern is that increased tariffs on foreign imports could result in significantly higher prices for American consumers nationwide in stores. Critics also argue that supply chain disruptions, notably within the auto industry, may foster considerable instability across related markets, causing widespread concern. Industry executives, including Ford's CEO Jim Farley, have voiced serious concerns over escalating vehicle costs and potential production delays impacting market operations. On the global stage, mounting trade tensions have prompted several key allies to consider retaliatory measures against these tariffs to safeguard interests. Recent reports reveal that the European Union is actively exploring counter-tariffs in response to the administration's provocative trade policies amid rising tensions. Both Canada and Mexico have signaled potential responses, mindful that their economies are deeply interwoven with U.S. markets to protect vital interests. Under scrutiny, China now faces heightened pressure as tariffs target persistent issues in global economic competition and market fairness with increasing resolve. Several market analysts warn that this aggressive tariff strategy might slow economic growth and potentially incite a period of stagflation if unchecked. Many economic experts caution that rising production costs and diminished international trade could lead to broader economic slowdowns affecting national prosperity severely. Recent industrial data indicates a measurable contraction in the manufacturing sector, sparking concerns over long-term industrial stability and prompting urgent policy responses. Consumer confidence has notably declined, with multiple surveys revealing growing anxiety about the uncertain effects of these tariffs across the nation. Widespread, the University of Michigan's Consumer Survey reports significant drops in sentiment, as inflation fears continue to grip American households with mounting pressure. Rising inflationary pressures, combined with increased import costs, are expected to substantially squeeze American family budgets this year. resulting in tighter spending. Political divisions are intensifying as lawmakers from both sides engage in fervent debates over the merits and risks of the tariffs today. Several Republican allies have voiced skepticism, questioning whether these tariffs truly serve the broader, long-term interests of America and ensure economic stability. Within political leadership circles, debates intensify regarding the timing, scope, and overall efficacy of these sweeping new trade measures, sparking robust discussions. This development mirrors historical trends in American protectionism, reviving long-standing debates about trade, economic policy, and national identity in a modern context. Past administrations have implemented similar measures, yet few have matched the ambitious scale and aggressive tone of today's policy as announced today. President Trump asserts that this policy represents a bold step toward reclaiming America's economic independence and restoring global leadership for future prosperity. The administration emphasizes that domestic industries will receive increased investments, fostering job creation and accelerating economic recovery nationwide with comprehensive fiscal support. However, critics warn that these aggressive tariffs may backfire, potentially causing unintended disruptions in the global market structure and hurting domestic consumers. Economic experts underscore several potential risks, including disrupted supply chains and escalating costs that could stifle long-term economic growth if measures fail. Market analysts predict short-term volatility as investors react cautiously to the uncertainties generated by these expansive tariff measures, affecting global investment trends. Rising consumer prices already spark concern, with experts forecasting that inflation pressures may intensify over the coming months if tariffs persist further. Specifically, the auto industry faces serious challenges as these tariffs threaten to increase vehicle costs and disrupt established production lines dramatically nationwide. Numerous economic think tanks are rigorously analyzing the potential long-term impacts of these policies on global supply networks to advise government strategies. Global financial markets have reacted cautiously, with investors closely monitoring evolving developments in international trade and policy shifts amid uncertain economic times. Debates continue over the future direction of U.S. trade policy, as supporters and critics passionately present their differing viewpoints across political arenas. Policy experts compare these new measures with historical precedents, highlighting significant shifts in America's strategic economic priorities today in a transformative manner. The international community watches intently, aware that such policy measures could fundamentally reshape global economic alliances and power structures with lasting impact. Political risks escalate as the possibility of a full-scale trade war grows, stirring heated debates among global leaders and challenging diplomatic relations. Lawmakers remain sharply divided over the effectiveness of these tariffs, reflecting deep ideological splits within government circles as partisan debates intensify fiercely. As the nation attentively watches, unfolding policy measures leave Americans questioning whether promised economic revitalization will ultimately outweigh emerging challenges without resolution.